Welcome to another weekly market update. Date is Sunday, October the 23rd, after the market closed on 21st of October. Let's start by looking at the overall composite index, all the stock markets of America blended into one chart, the NYA, and look at the weekly chart here. And as you can see, looking at the big picture there of multi-years, there hasn't been a new high in the market since May 2015. We're a long way off that. That's not what a bull market looks like. However, this market continues to levitate above its key moving averages here, the red and blue lines, which suggests it's not ready to go down either. So we get this ongoing kind of stalemate between buyers and sellers, not really a bull, not really a bear. And it depends on which chart you look at as well. If you look at the S&P 500, you do see a new high happen recently, but I believe that's something of a distortion because of pension funds unable to, with the low interest rate environment, they've got nowhere else to put their money. So it's a bit of an odd run right now. But what's making me choose the overall, the NYA, the one I just showed you as the picture, is this chart here, as I've mentioned before, which is the stock market of planet Earth, the FTSE All-World Index, which is all the stock markets in the world combined, which pretty much mirrors more like the NYA, the one I just showed you. So that's what I'm looking at. So in the midst of all the, everyone's just, waiting around. It's not really a bull, it's not really a bear, a lot of uncertainty, a lot of drifting around. As we approach an election, and there's only, just over a couple of weeks to go when the US election on November the 8th. And then we'll maybe, some forces like the Federal Reserve may stop distorting things and we can see what happens next. So in the midst of all that, I'm homing in on the daily chart here, the short-term chart of the new New York Composite, the NYA again, as my cue to figure out which way this market's going to go in terms of its longer-term trend, up or down, by looking at the wedge formation that I've discussed before, and so far is keeping to form here. This is what's called a wedge, connecting all those horizontal pegs like that. It goes down there, and then if I drew across there like that, that's a line of support. And what this means is then is that there's a line of support here, but it's got downwards pressure. And this was, quite, and I mentioned this downwards wedge, I think, a couple of weeks ago now, if not the week before. And you can see the market here on its daily closing trying to get above that wedge, but failed on Wednesday, Thursday, Friday. So it's just confirming this formation even more. So what does it mean? What it means is that whichever way the market closes next, it's an indication about which way it's going to go. If it breaks up above this wedge here and the closing price is above here, that's a good indication for the stock market. It could be higher prices ahead, but lower than that, then it should be the other way around, and then we're looking for it to be testing its 200-day. You just feel that this market is just kind of limping along, going nowhere in particular until this election is out of the way, because it's a close race on this presidential election, and the market hates uncertainty, despite the fact, interestingly, that the bookies are giving odds on Clinton winning, 80% odds of Clinton winning, and Trump just 20%. See, now the stock market prefers Hillary Clinton winning, not because it's good for the economy, because it's just a stat. She represents the status quo. The market hates uncertainty, and Trump represents uncertainty. So it's interesting then that if this was a done deal and Hillary is definitely going to win and those bookies are correct, then why isn't the stock market acting accordingly? Why isn't the stock market, surging ahead on that basis? Why is it acting as if there is this uncertainty? So it's interesting, and maybe just like with Brexit, the bookies may have it completely wrong, and the stock market might be telling us that, but we'll see. So unfortunately, we're still just playing a bit of a waiting game in terms of an overall market direction. Longer term, I'm still very much, this is just a bear market. All I'm doing really now is trying to judge the short term, the medium term, so I can get a sense of timing about when the bear market will resume. But until I see evidence to the contrary, this is still very much a bear market that's playing out here, the kind of a rally artificial rally, I would argue, in the middle of a bear market. The economy is not getting better anytime soon. So that's all for this week, and I'll speak to you next time.